Let's bring in the Chartmaster, who's here at the table.
Look at that. Well, when I heard guarantee, I had to, because that's a big word. But anyway, it's funny. I was looking at something. So today is a Friday, right? And 2 years ago on a Friday, guess what happened? FedEx beat, and Nike missed, and we were all sitting here. And guess what? The S&P, it is exactly unchanged. It's 1316. Today it was 1313 then. The market has made absolutely no progress in 2 years. And while there's been a lot of volatility, I don't think much is coming. I think the offsets, you see this money flow into Apple, into Microsoft, but that's already run its course to some extent. And yet this catatonic, and rightly so, abandonment of banks and financials and energy. But we're just churning. And the thing that let me tell you this, all my calls with clients, everyone, because their job is to beat the bench, right? As managers, custodians of assets, they're constantly trying to figure out that chess match. But, and you know this as much because you're doing it, sometimes it's very hard to do that. And also this, we all see direction. So think about the market. It's been very directional. From the 18 low all the way up until COVID, we were straight up. And then we went straight down when we crashed. Then we went straight up, government-induced or not, all the way from the COVID low to the highs, and then went straight down. We haven't had a sideways period in a long time. And there are endless periods in history, in the 70s, in the 50s, where you are sideways. And I think that's what this is. And now, either that's the opportunity to pick winners, or it's the opportunity to churn and never quite.
I have a question, though.
Yeah.
1 week ago, or not 1 week ago, a week and a half ago, did you also think that we were in for a sideways period before this whole bank meltdown happened?
And that's what the pair two is. I mean, I know it gets so boring. People say, well, you're kind of saying that a lot. Well, because hold means nothing. Hold is a Wall Street euphemism for sell. We don't want to offend people. It is a pair of twos. It's not a big hand here. There are big hands, and you get risk or reward. Do you step in and buy banks? A lot of people make that case. That's high risk, high reward. But the aggregation, equities as an asset class, as measured by the Russell 3000 or the S&P, they are basically stuck going nowhere. And I think the temptation is always to see direction.
Carter, thank you. We'll see you in a few on options action.
Guaranteed. Guaranteed you'll see
Guaranteed. Grasso, quickly, what do you think about
this? So I agree, and I felt the same way. I think we're in a trading range. We dipped down to the lower end of that trading range, kind of broke it. 38.15 is a huge level in the S&P. I don't think we have the ability to rally all the way back up to that trading range, which the top of it was 4,200. So just watch that 38.15 level in the S&P to the downside.
You know what's also guaranteed is that the banks are going to report their Q1 earnings. They're going to be the first in the cycle. That's going to be in mid-April. And I just got to think, as much time that these bankers are going to be spending in Washington over the next few weeks, the level of transparency, there is no fudging stuff for their Q1 earnings and their current outlook right now. And I think that could be a really nasty period. I think we probably sell off into it a little bit. And I also think that what this bank situation does for a lot of companies who've been doing death by 1,000 cuts as it relates to 2023 outlooks, I think it gives them a mulligan to actually maybe go out there, take down the guidance, and maybe that's the thing that listen, what bugs me about the market right here, and I totally respect what Carter said, and Carter actually had a really nice call from the February highs that the S&P
coming.
No, the S&P was going to come in, that the Nasdaq was going to come in, and they've given back a lot of their gains from the highs in the year. I just think we're going to be retesting those October lows in the not so distant future.
All right.